Everyone knows investing in real estate can grow your wealth. But for many founders, business owners, and entrepreneurs, time isn't something that they want to put into the equation. So today we're going to talk about do-it-yourself real estate investing versus professional real estate investing, and how real estate syndications can allow busy professionals to invest in institutional quality properties without the hassle of being a landlord or locking up tens of millions of dollars. Stay tuned for this episode of Own the Exit. According to the National Association of Realtors, approximately 90% of all millionaires in the U.S. have made their wealth, at least in part, through real estate investing. You guys have probably heard that statistic. But not all real estate investing is created equal. A lot of people think buying a personal residence that they live in is investing. Yes, that property, the mortgage will get paid down over time. It will go up in value. To me, that's not investing. That is monthly living costs like groceries, like gas, health insurance. That's just putting a roof over your head. The two primary ways of investing in real estate are do-it-yourself or group investing, where essentially you give your money to somebody else, whether that's a syndication, whether that's a REIT, whether that's some kind of joint venture where you're giving your capital to someone else to do the work. Here's why this matters. As busy entrepreneurs, as founders, as people who are staying in our lane, adding value, staying in our sweet spot, as specifically speaking to business owners here, a lot of times we want to get into real estate. We want to build that passive income. We want to compound our wealth, preserve our wealth, things like that. But it can be a tremendous draw away from our main business. It can suck our time. It can suck our energy. And that's why real estate syndications are a very powerful tool to gain all the upside of real estate while still preserving your time. And at the end of the day, we all have the same amount of hours per week. And so neither way is right or wrong. I've been a do-it-yourself real estate investor for many years. I bought my own rental properties. I built up a portfolio of rentals. I was doing all the work. I was finding the deals. I was managing the tenants. I was doing maintenance. I was doing everything end to end that was involved with owning rental properties. And meanwhile, I had another job. And so it got to the point where it was difficult because it was taking a lot of hours out of my week, taking a lot of time. And I enjoyed it to a point, to then where it became stressful and when it became unsustainable, where I was like, I want more rentals, I want to build more wealth, but my capacity is limited. And so that's where I shifted in my mind to group investing, where I sold all of my individual rental properties. I had houses and duplexes and small fourplexes and things like that in different locations. Sold all of those and took that equity and rolled it into a larger apartment complex, and then have continued to invest into larger deals with other investors, with professional management, where at the end of the day, I'm getting similar returns. Actually, the National Council of Real Estate Fiduciaries did a study that group investing actually outperformed do-it-yourself real estate investing by 4% annually, which is a shock because we all think, I don't want to give that guy a fee. I don't want to split up my profit. This is my money. I'm going to do it myself, right? Like, why would I pay somebody to do what I can do? But at the end of the day, you're actually taking away time and energy from what you're probably better at doing, or something where you've maybe already gone through that learning curve of whatever got you that money in the first place. And you might actually make 4% less annually doing that active work versus allowing professionals to do it for you. And that's just a statistic. It's not always true. People make a lot of money do it yourself. People make a lot of money in group investing, and they lose money both ways too. So not every deal is going to look the same, but that is just a statistic across a broad spectrum of real estate investments. And so I just want to say there's no right or wrong way to do this. I have a friend who has 15 or 20 rental properties, and he loves managing them. It's his only job. He probably only spends, I think, 15 hours a week. He mows the lawns. He rolls up with his truck and he's got his riding lawnmower, and he loves it. And he fixes the plumbing. If something's out, he'll go get a water heater at Home Depot. He really likes being super active, and he's not wired that way. He doesn't want anybody else to do it for him. And even if I was like, man, you're working for free. Like, you could literally not do this and make the same amount of money. And I showed him a couple of examples like, hey, we can put it in this or that. He doesn't care. It's not even about the money for him. He really wants to manage his own investments in his own properties. And I think that's super cool. It's not for everyone, but it is for him. And he's done very well. And he's built up several $1,000,000 worth of rental properties, and he's actually got them, a lot of them, like mostly paid off. Fantastic. But for me, I have another job, right? And for a lot of you listening now as entrepreneurs and business owners, you guys have other jobs where you're crushing it, where you're making a lot of money in other areas, to then try to go and do what this guy's doing and roll up with your lawnmower and knock on the door and try to go walk, fix leaky toilets and things like that. It just doesn't work. So it just depends on your lifestyle. It depends on your skill sets and what your passions are. And even for this guy, I don't know how many more he can buy. There will come a limit where he won't be able to buy anymore because he won't have the capacity as a kind of a solo operator. But again, no right or wrong way to do it. I'm just laying out a couple of options here, 2 different ways of real estate investing. I much prefer group investing. I much prefer having my money into more premium assets, larger ones, more diversified with a professional management team. But what do you guys think? Hit us up in the comments here. Do you like do-it-yourself real estate investing where you have all the control, but you also have to do all the work and you also have to take all the risk and you also have all that responsibility and weight coming back on you, but hey, you get all the upside if it works out? Or going into larger deals where you're passive and you're trusting a management company, you're trusting a sponsor, you're trusting somebody else to take care of your investment, and hopefully they have their money in the deal too. There's pros and cons to both. Thank you so much, guys, for tuning in to Own the Exit. Keep crushing it.